In this video, we're going to talk about Fisker. If you're considering adding Fisker in your portfolio, then keep watching this video until the end because it'll cover many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $13.60 and closed at $13.26. The lowest point at which it fell to was $13.16 and the highest point it rose to was $13.85. Compared to the current price action, its 52-week low was $8.70 and the 52-week high was $31.96. The current trading volume of Fisker is 9.6 million shares, compared to the average volume of 1.7 million shares. The market is currently treading the water carefully regarding where the company may end up to, based on the market sentiment and the profile of the company itself. Keep in mind that it has been hit hard by the wave of sell-offs from early 2021, and we are still waiting for the first car to be manufactured by the company, probably in late 2022. The price action trend for Fisker in the short term is quite encouraging, because it has surpassed its recent low and is now going to be higher levels. I would say that this marks the end of the recent sluggish performance, and as a result, I would call it a moderate buy at the current stage. The long-term trend of Fisker has been trading in a range between $10 and $20 with occasional peaks. Since the beginning, the market has been less interested in Fisker than in many other EV stocks, partially because it has been the second attempt by Henrik Fisker to start an EV company. This is possibly why I believe that Fisker is a milder version of what has been going on with the EV sector altogether, and what is still going on right now. This is a good news for investors in my opinion, because it means that the entry points are more attractive than other companies, like Tesla or NIO, with large amounts of premiums investors would have to assume on the get-go. This is why I would recommend to enter in Fisker stock now and to hold it for about 6 to 8 months for the shares to appreciate during that period of time. From the price actions patterns, it would be up to you to determine if the stock still has enough steam to go upward, regardless of the company's fundamentals. Now, let's take a look at the market capitalization of the company, which represents how much the company is worth in the eyes of investors. Regarding the valuation of the company, it has been an impressive bullish run all the way to early 2021, when it basically gave back all the gains for the entire year, and went back to where it was in late 2020. With that being said, it is still up by almost 7 times compared to where it was back in 2019 at around $700 million. The current valuation is at $3.91 billion, down from a peak of $5.06 billion. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling the equity to keep the ship afloat. The number of shares that Fisker sold over that time increased in 2019, but stopped growing since then, stabilizing at around 277 million shares with a slight increase in 2021, currently standing at 295 million shares. This means that a company is aware that it needs to continue diluting the existing shareholders in order to finance its projects, but is quite careful about it. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money in the same genre of company. Following the stock market craze back in 2020, the stock market decided to now pull back from the entire disruptive, innovative sector, covering biotech, electric vehicles, and anything requiring keynote presentations to attract venture capitalists. This wave of pullback can be explained in 2 ways. The market needed niches to park their capital inside to avoid getting heavy losses, and since the stock price of those companies increased multifold, Many of them decided to lock in the profits and didn't mind the massive sell-offs that it would initiate. The second reason was because the market began to realize how overly exposed investors have become to growth stocks. These are the reasons why the stock ultimately collapsed for so many companies that everyone was talking about. In the current circumstances, the recommended approach is to be careful when buying the stocks. On one hand, the stock may be able to climb back to where it was, just by blossoming from the operations. On the other, the stock may simply increase because it fell low enough. This means that in the current market settings, we need to tread the water carefully regarding when and how to buy shares. Many of them were overpriced over the past 12 months, and we may need to wait for another few weeks or month before the timing is ripe to increase our holdings. With that being said, there will always be sudden events that will create a lot of volatilities for individual companies, and this is why it is always recommended to hold a small position in those stocks in case you fear missing out. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.